Time now for the markets with Leighton. And Leighton, you say somewhat of a surprise in the cattle on feed report?
That's right, Artis, and Brian Williams will be along here to explain those numbers in a moment. Also ahead this week, the hog sector may still be expanding. It's a possibility that Texas flooding impacts the cotton market, while acres and yield are described as big soybean factors as far as future market direction. The monthly cattle on feed report was released as the Memorial Day weekend began. Extension Ag economist Brian Williams says some of the figures came close to what analysts were expecting, but not all of them. He talked to me on Wednesday. Well, Brian, did the cattle on feed report have much impact on the markets when it was released?
Well, it really, while the report itself was considered bullish, it really didn't have too much of an impact. I was looking at the futures, and live cattle futures really didn't change much at all, and feeder futures really just went up very slightly.
Well, let's talk about some of those individual numbers when we talk about marketings, placements, and total on feed.
Well, looking at the numbers, total cattle on feed was up about 0.8%. That was a little bit lower than expected. Placements were down 4.6%, which was quite a bit lower than what analysts were expecting. And then marketings were down 7.8%, which was real close to what the expectations were.
So why that one surprise, placements being down? What was the driving force behind that?
Well, I think if you've been watching the news a lot, think about Texas. And the last several years, they've been in drought year after year after year. Well, this year they've got flooding. And so with all that rainfall that they're seeing in Texas, Oklahoma, Kansas, they're getting a lot better pasture conditions. And so we're seeing producers keep those cattle on grass, as well as increased heifer retention to try to build their herd.
Well, despite that surprise, so to speak, generally would you say this was a friendly report for the cattle?
I'd say so for two different reasons. Number one, the smaller numbers in placements and stuff, it's considered bullish especially for our cow-calf producers. But then on the other hand, it's showing that the conditions are favorable to increase the herd size with the improved pasture and stuff. So from a couple different directions, I'd say, yeah, it's a friendly report.
Now, talking about feeder cattle in particular, it seems like if you read the commentaries, the analysis, kind of bullish right now.
Yeah, looking down the road, you know, we're on one hand, there's fewer feeder cattle going into the feedlot, and they need those cattle to try to keep their numbers up. So that's really helping there. Plus, we've seen lower feed costs for the feedlots, so they're willing to pay a little bit more for those feeders as well.
Now, as far as like boxed beef, I mean, we've seen those prices not only hold, but they've been actually a little bit higher.
Yeah, the retail April retail monthly average for beef prices was hit a record high at just over $6.40 a pound.
Moving from cattle to hogs now, many traders seem to think the pork sector may still be expanding. However, many in this market may begin taking a much more cautious approach as the month of May ends. Analyst Don Rose offered this assessment.
Well, seasonally, the hog market's doing what it usually does. It usually rallies $25 a hundredweight from the winter to the summer highs. You know, we're running into that type of a range again. We think it's fully dialed in, the bull story. And if you look at the numbers that the government puts out, the hogs were over the projections that the government has. Remember, for the fourth quarter, they're really in that $57 to $63 range on the fall months. In October, you know, when it gets up 73, 75, looks pretty lofty. So we don't think that the expansion has been halted. We think the grain prices are too low. So we'll see on the next hog and pig report. But overall, we're still supply bearish on the hogs on this rally.
Time to break for a trivia quiz on Farm Week. Our subject is a familiar activity of the recently passed holiday weekend. How many U.S. homes cooked on a grill Memorial Day weekend? Is the answer A, 41%, B, 57%, C, 69%, or D, 78%? You'll find out in just a few more minutes. We move into the row crops market now. We begin with cotton, where ag economist O.A. Cleveland says there's a bias for higher prices for new crop, due in part to weather. He notes that given the loss of cotton acreage in Texas due to floodwater and grain prices, cotton could move to the mid-70s. In addition, U.S. cotton exports continue to provide solid support and may even exceed the current USDA estimate. Well, Delta Farm Press says June 30th is shaping up to be a red letter day for soybean farmers. That's when the USDA releases its acreage forecast for all crops. Those numbers will give bean growers a better idea of how big the crop could be and how low soybean futures could go. Analyst Mark Gold thinks the loss of some bean meal demand due to avian flu is not really a market mover, but that those acreage and yield projections will definitely be one.
I think the beans will have a little bit tougher go in here, but if the dollar comes down, we can see that. One of the things certainly that's hampered the bean market has been the meal market because of the bird flu. We don't know what the bird flu, how much longer it's going to last. Is the warmer weather going to kill off the virus and see things improve? We don't know that. We saw some more cases in Iowa here just in the last 24 hours. The numbers are, significant, but really, when you look at total poultry production, it's a drop in the hat. And yeah, can we lose 20, 30 million bushels of corn demand, some meal demand out here? We can, but it's a drop in the bucket compared to the big issue going forward, which is acres and yield being the biggest factor there.
According to a new study, Americans are spending the money they save now at the gas pump on food. Consumers save an average of $67 a month compared to what they used to spend on gasoline. The report says most of those extra dollars are being used at restaurants and grocery stores. In fact, for the first time, Americans spent more money in restaurants than on groceries, according to Acosta Sales and Marketing. That first happened in December and continued into April. Back to trivia now to wrap things up for this week in the markets. B is the right answer. The Hearth, Patio, and Barbecue Association says roughly 57% of U.S. homes cooked on a grill last weekend.